Welcome back to Blockstream Talk. Today we're talking to Assaf Gilboa, CEO of mining hardware maker Spondoolies. The mining business is fascinating. It's boom and bust and only the strong survive. It's massively capital intensive and requires a delicate balance between maintaining operating cash flow and securing access to chips and power that often have really long lead times. And all of that is done in the face of two notoriously volatile inputs, Bitcoin price and hash rate. Spondoolies was acquired by Blockstream last year, so I think the first obvious question is, what are the synergies here for Blockstream? What's the master plan behind this investment? But what the market is probably most interested in, especially after several months of liquidations, DeFi blowups, fund bankruptcies, and capitulations, are the miners, especially the listed miners who were rewarded with high valuations during the Bitcoin bull cycle for holding Bitcoin on their balance sheet, are these guys the next shoe to drop? Are they the next ones who are going to impact Bitcoin price? We covered a lot of other interesting points that I think aren't typically picked up in these Bitcoin mining discussions. One of the favorites for me is on the semiconductor side, the Foundry business. While Bitcoin mining is probably more decentralized now than ever, how do you get around the bottleneck that is TSMC and Samsung? A bottleneck so tight that the combined efforts of the US and China, the two biggest economies in the world, are still probably more than a decade away from catching up to TSMC, if ever. Another interesting one is hash rate growth. So last year, miners were forecasting that hash rate growth could probably double. And they based that on equipment orders as the semiconductor crunch was starting to ease. But I wonder now if energy is the big pinch point constraining hash rate growth. And will hash rate growth once again, as it did during the semi-crunch, prove slower than expected? I think this is a good one. We covered a lot of interesting points. If you find it useful, don't forget to like, subscribe, and share. Assaf, good to meet you. Thank you for joining us.
Thank you for having me.
That's great. So maybe we can start with a quick introduction, who you are, what you do, and how you got into Bitcoin.
I'm an electrical engineer by trade, graduated like more than 20 years ago at the Israeli Institute of Technology, the Technion. I've been working in several positions, mostly in communication. Doing VLSI and ASICs, FPGAs, or whatever, and roughly around 2013, after working with several colleagues from communication companies, which the most notably is Mellanox, that it is currently NVIDIA. I was approached by several of my colleagues and Guy Korem, which was the CEO of first incarnation of Spondoolies, and he has offered me to join a new company which was doing novelty stuff. It was very interesting at the time. I've done a lot of communication and was looking for something more interesting, and so I've jumped on that bandwagon, and we've opened Spondoolies, and after Spondoolies was an amazing experience for me. We've done several ASICs. We've done several miners out of those ASICs, but we went bankrupt after 4 years. Bitcoin lost 50% of its value. We were funded by several VCs that weren't so keen on continuing this gimmick as they saw it, so the company went down. After several years of doing some other stuff, we've regrouped the guys and opened Spondoolies again, and done another miner, which was Dash One. till approached by Blockstream roughly a year ago, and after some time, we've joined Blockstream. I'm heading the Israeli site, which is doing the mining, um, and hopefully we'll have some ASIC miners soon.
Bitcoin mining is, I think, maybe the most interesting industry in the world, but it's just punishing. It's boom and bust, isn't it?
Yeah. It's you have to suck in that it is a capital intensive activity. We are talking now on activities that takes few tens of $1 million to have, and also with today's situation with TSMC, Samsung, and the such, uh, it is not even enough that you can secure the money, because sometimes they will just uh, deny you access. Uh, but it is something that it's also some kind of a marathon. You don't do you don't do one design, winning the jackpot and retire. It doesn't work that way. It is something that you need to learn over time and excel yourself. Uh, as you can see, our Chinese competitors have done that. You always learn. You always assess your structured your cost structure, and you are always improving.
Yeah, I mean, the Foundry side is really interesting. I hope we can dig into that a little bit later on. But how, so I guess within the hardware manufacturing space, I guess the big names that people are most familiar with are probably Bitmain and MicroBT, and then maybe at a push, Canaan or eBang. How is Spondoolies different than these guys? Like, how would you say that you differentiate yourself from these other Bitcoin mining hardware makers?
Our DNA is coming from communication companies, uh, from big data centers, uh, you know, fine grade of quality and stuff like that. Um, we are we are less into to the shoebox, and those kind of designs are far from us, and we are trying to act on our beliefs on how mining should look like. Mining is a professional thing. It's not something you do at home. It's something that should evolve into something which looks better, is more, um, can have longer life cycle. You can maintain it easily, and it is easy to operate. And I think that you don't see that with the miners. With the miners today, they somehow evolved out of a shoebox design, which was probably very cheap, and it stayed that way. But we view ourselves as a different player. We want to do a premium design, which have benefits to the one that operates such kind of a mining site. So we are more about quality and field replaceable and all of that stuff, which is currently not addressed by the current miners.
Yeah, I think the perception at the moment is that you run them hard for 3 years and hopefully a little bit more, and then basically they're just kind of trashed by the end of that. Um, I guess that's how most people would perceive it.
Yeah, but if you look at the designs which are out, uh, you find older design as well, and you don't want to throw out machines. You have also failure rate, even for new machines, right? Each year you have even machines which are new, which are going out, and if let's say that you could have replaced them, or let's assume that the enclosure was supporting several several types of miners. Let's assume you can renew and replace cards without doing massive changes in your site. That is clearly a benefit, right? Because you don't have to replace everything. You can just renew like you are putting something. You just plug out an old or faulty miner card and replace a new one without changing, controller, fan units, and the rest. I think that is an advantage.
So, what are the synergies you guys see between Blockstream and yourself?
In the past, we were just manufacturing miners, right? So we didn't uh, we didn't know the customer. The customer was something obscure. There were several types of them, and you couldn't focus yourself and get the feedbacks out of a customer, and you couldn't work with a customer towards a holistic solution, right? You were doing your stuff, your bit, and someone would have taken that and did something with that. But once you look at it as an holistic solution, which is not comprising just the miner itself, but also the container and the container and the site it is in, it gives you a different level of understanding, and also you can focus, you understand what are the exact needs, and you can focus yourself better towards the customer. Um, Also, in the past, we were, financed and funded by venture capitals and other guys like that, and working with someone which is all Bitcoin, is all in on Bitcoin. This is different. They understand why they don't get into a bad mood each time the coin drops a bit, right? And when you are
Yes.
talking with investors, they are,
Yeah.
their up and downs is, is something which is hard to handle and how to manage over time. So we are totally aligned with Blockstream. They understand the material. They can give us good feedbacks. They also can, they are involved in also several projects which are more interesting and can give you, you know, uh, exciting stuff to look and to experience, which we didn't do in the past.
So, are you working with the mining team now to help kind of optimize their setups?
Definitely, we are talking with them. We exchange our intended design and get their feedbacks, and that is a fruitful interaction. We actually, we are reacting upon them. When you are doing something while you are thinking how it should look like, it looks different when you are interacting with the end customer. And also, air cooled and immersion cooling and all of that stuff. It's something which is interactive.
I mean, that seems like the trend now is more towards immersion cooling. Is that right?
That depends, right? In when mining just started, everything was all the sites were in cool places, right? You were doing air cooled mining, and but as trend changes and you don't have capacities on those northern states, either in Europe or in Canada, and regulation will probably can get you in and out of places, not to mention electricity prices. You need to face harsher, let's say, environments. And that said, um, air cooled is nice, but you have to be prepared to other means of cooling, and that is of course that is a challenge. Let's say it is either you are spending a lot of energy let's assume you are in a warmer place. Either you are losing a lot of energy in cooling your site, or you are investing a lot of money in cooling it in other means. So this is interesting. Looking forward, I think that air cooled will be less less becoming less and less common than the immersion cooling and other water cooled.
It makes sense as we kind of expand into different geographies, right? If you're going into places like, Texas or El Salvador or, various other locations where it's not exactly, like northern China where they just have to basically open a door, get the wind through.
Yeah, like
right?
Scandinavia, Iceland,
Yeah.
right
Yeah.
at the beginning.
Yeah.
Yeah. So yeah, that's the trend.
The investor profile, you're talking about the end customers. I mean, that has changed so much in this cycle too. So I think, maybe a cycle before it was a lot of high net worth people. I think probably relatively few institutional kind of clients. And then I think that was one of the big changes over this recent cycle in 2021 is that we saw a lot of like really mainstream institutional investors come in and start looking at the space and allocating capital. So do you feel that that's been one of the big changes over the last maybe say 5 years?
I think that is also it's a good change, if I would say, and I think that Blockstream at this space has an advantage. When you are talking with institutional and they are doing their due diligence, right? It's not their money, right? It's not. They need to work very diligently to see that they are not making bad investments or something that they will need to pay afterwards. So, and I think that Blockstream in that space, having it's a Western company, everything is transparent. Everything you are accountable on everything, and having the miners done at your premises. And mining gear is one of the key factor, right, of mining, even for anyone that joins that market, and having some kind of a site under its financing a site or getting Bitcoin out of a site. So the gear, the mining gear is a key factor, and having it all under, let's say, Western companies accountable and everything, that is an advantage Blockstream has. Other than that, I think institutionals are big money, right? And that is definitely a good sign.
So looking forward, is the plan for Spondoolies and Blockstream to team up and to sell hardware externally to the broader market, or will the hardware that Spondoolies manufactures be used exclusively by Blockstream?
I think that both options are open. I think that initially we will, of course, use that internally. I think that also selling to external customers, let's say, it's more demanding, right? You have support, and you have uh, other issues to solve before you can allow yourself selling that to third parties, because we are taking ourselves seriously. We don't want to just sell it and don't have the infrastructure to support those who purchase that. So I assume that initially we will run it internally and be more robust and understand that the flow is working perfectly. And selling to others is also it is something which is on the table. One of the advantages of having your ASIC team in-house is that you are less sensitive to market changes. The flow of miners should be relatively stable, right? So whenever the market is high, you'll probably use your own supply, and whenever you are not able to power all the miners you've produced, you can sell them out. So that gives you stability.
Yeah, when I was working at Macquarie previously, we were working on an IPO with a big miner, and the chairman of that company had a good line that always stuck with me. He said, "In bull markets, you want to sell hardware, and in bear markets, you want to mine." And that kind of stuck with me because the margins that you can get in bull markets are like, I think they're sometimes kind of mouth-watering, right? So that's a great business to be in when you can do it. And then, like with this last cycle with the semi crunch, and the inability to access chips, they really dictated the terms, right? And people just had to go with it. And there was so much money coming into the industry that people had the money to pay for prices.
Yeah. It kind of leads us to TSMC and Samsung, right?
Yeah. No, that's interesting. So I think through the course of this last cycle, Bitcoin mining is probably more decentralized than it's ever been, right? So we've had a big chunk of it come out of China. Maybe you've got like 40+% in North America now, which is, arguably not great, but it's better than having 70% in China. So it's probably an improvement. We've got more big miners than ever before. There's, a number of them listed in the US and around the world. But I think that still that point of centralization is the foundry business, right? Is TSMC and Samsung. And at the 5 nanometer level, Samsung is even, their yields are behind TSMC. So how do you get past that? That's such a massive industry. You can just, it seems unbreakable, that kind of problem.
That is unbreakable. The bottom line is that is unbreakable and will remain that way. In a way, of course it's not a problem just for miners, right? The semiconductor is a problem for everyone actually, and you can hear about cars that cannot be produced because they don't have the semiconductor involved. So we are just a small fish in a very big pond, which is centralized totally by Samsung and TSMC. You have other vendors, but for our mining operation, they are not relevant. Hopefully, it's they have entry barriers which are huge. Those ASIC producing companies, it's a lot of money, and if you even look behind the curtain, you see that those companies are also bottlenecked by, I think, 2 or 3 global
ASML,
companies, which are making the lithography machine. So it's all bottlenecked, and I can say that even if you even see politically, right? You have TSMC running from Taiwan. If politics goes sour with China, the crisis can be huge, and there is no way around that.
You think inflation is bad now?
Yeah, and even I recall, I think where I don't know, 10 or 15 years ago, there were some earthquake in Taiwan, and the entire memory industry was suffering badly. So uh, the fabs are centralized and will remain that way because I don't see anything happens which will change that considerably over the few 5 to 10 years, and you can say that maybe Intel will step in again. They were a considerable manufacturer, few years back, but somehow they didn't manage to get their newer process working. But I think the policy now in Intel is to try and be again some kind of a leading fab. And I think that maybe China, which is investing huge resources in having the semiconductor industry ramping on, maybe that will also be a direction because uh, the entry barriers are huge. You cannot. It is not just that tomorrow, even if I have the money involved, uh, you won't get there in few years. It's like doing Bitcoin miners. It will take you several generations to catch up and be in the in be and join the competition, which is roughly today only Samsung and TSMC.
Yeah, and to show how wide that gap is, I mean, it's been a strategic focus of China for, like 20 years to close the gap on TSMC. And by hook or by crook, by trying to grab employees from TSMC, that stuff's been going on forever. And they're really good at protecting it and siloing off different, I guess, parts of the business that are responsible for all that design. So, I mean, that's just even a national level effort from one of the biggest economies in the world hasn't been able to close that gap. So that's always stood out to me as how can Bitcoin miners hope to do that? So I guess the focus of it is that it's like these advanced processes, like the 5 nanometer, 7 nanometer, is really essential for Bitcoin mining, and 12 nanometer. And I guess there was some talk during the last cycle, like, hey, could we make this work with 12 nanometer machines because you couldn't get any 7 nanometer chips? Is that just not possible anymore? I guess maybe at a high enough price with low enough hash rate, anything's possible. But
Right, right. So if you were running an operation right on Bitcoin, you wouldn't like to be uh, you know uh, too sensitive around the price, right? You don't want to shut your machines down. And saying that, of course, older processes will yield less of efficiency. Okay, you can optimize to extent a node. Sometimes, and you saw that the S9s were really good at on 16 nanometer.
they're like the AK-47s of mining hardware.
Yeah, yeah, exactly. And you saw that even Bitmain, it took them a while to make something which is better than that. Even with newer, even that they had the money, they have the time, and they have better nodes, they didn't manage to do that. So you can take an old process and make it something exceptional, but it will take you a lot of time, and it is something which is very risky. You will have to do maybe several rounds, and so uh, eventually better nodes will give you better efficiency. And that said, you don't want to shut your electricity down whenever prices of bitcoins are lowering or whatever. So I don't see a way around the newer processes.
Then the other issue too is that the boom and bust nature of Bitcoin mining is that TSMC doesn't like Bitcoin miners that much because of the order volatility, right? Like, people forget in 2018 that was a big deal when Bitmain made them miss their guidance, and they never missed their guidance. So that was a big deal.
From their perspective, they are absolutely right because those kind of production facilities are planned to the minute. They cannot afford downtime because we've talked about the large investment and the lithography machines and everything. You
Yeah.
have to keep it everything running, and you should know in advance whatever you are doing, and not leave holes in it.
They seem to like to use the Bitcoin miners to help take up allocation on new nodes, right? So when 5 nanometer came out, they allocated first to Apple and Bitmain, and I think also Canaan as well. It seems like how they kind of like to operate, just to make sure that they can fill everything up, and then maybe at 2 nanometer they'll do the same.
Yeah, Bitcoin has a little requirements from a fab. A fab actually needs to have lots of test chips going on, and SRAMs and memories and other special IPs are more of an issue for a new process when you are running a new process like 5 and 3 and soon and 2. it's very easy to produce Bitcoin ASIC. So I assume that it's a nice it's a nice thing to do when you are starting the process.
And then, so what is the state of mining as a whole at the moment? How much pressure are people under at the moment? Because I think, there's a lot of talk we've had so much capitulative selling. We had Tesla get washed out.
Yeah.
I saw news Finland sold a bunch of Bitcoin. We've had all these liquidations from various hedge funds. And people are looking at the miners as maybe the last shoe to drop. And I know, we just said miners are the toughest people in the industry. I think often they're the most bullish and the most reluctant to sell as well. So how much pressure are the miners under at the moment, do you think?
It's probably varies from operation to operation, right? You have your fixed cost, which you pay in dollars, right? You don't pay your electricity bill or real estate or whatever with Bitcoin. So I guess that
Yet.
yeah, yes, and I probably not in the coming few years, but so probably operation which leverage themselves or put all the eggs in the same basket, right? You are mining Bitcoin and then you are holding your Bitcoin. You are doubling your risk, right? And in a volatile market as Bitcoin, it's not new to have a downtime, bad season like this time, and that is probably unfortunately what is the reason to throw away the Bitcoin, because you want uh, to pay your bills for the next year, and you never know when prices go up again, right? And that is not for Bitcoin alone, right? It's the entire there is a slowdown for the entire market, and that is probably why the responsible thing to do is to lower your risk.
Yeah, I think it depends on how you plan your infrastructure spending as well. So if your budget, I think a lot of companies budgeted just, if we can raise $100 and we're going to spend $100 on ASICs because there was just such a shortage at the time. But if it's something like the Blockstream mining note, where we had all the costs baked into that already. So we're like, we're going to need 3 years of power. So we plug that all into the price of the product in the beginning. I think that's kind of maybe a different beast, because then you've got all your your capital that you need, all your outgoing that you need to account for, ready up front, rather than spending it all on ASICs and then maybe not being able to well, this is an interesting transition. So maybe my next question is how do I say this? We might need some editing help here. One of the interesting dynamics in the market is how the cost of ASICs have come back so much, right? So I think at the peak in 2021, they were selling for as much as $100 a terahash or more, right? And I think prices have come back now to maybe $30 or even $20. And one of the interesting dynamics within the market is that when people were buying these ASICs, they were putting down a deposit up front, and they were buying as much as they could, right? Because that's where the bottleneck was. So if people could raise $100, they were going 100% in. And, then the market comes back, and now you've got an obligation to fulfill that contract. So can you talk a little bit about that, about how these orders are typically placed within the mining industry, and maybe what implications that can have on the market at the moment?
Yeah, again, as you mentioned, you are paying upfront. The ASIC mining seller is not taking any chances with you. They are taking your money up front, and they have a location with Samsung or TSMC, and so they secure themselves from the dollar perspective, right? This is a bit like we were operating. You don't take a risk over your expenses, and building miners is capital intensive one. Uh, you have to secure everything. Nobody gives you any credit line, and big companies of ASIC and TSMC doesn't take any, don't give you any credit. So you are securing the money up front, and when the market is good, you can get a lot of it, and the premium when the market is high, and their costs are probably fixed, so it is the money is upfront. So looking on that, and the prices of the current prices, I think that will be it's a problem. But the miner is an averager, right? In a way, miner is providing you Bitcoin in a regular stream of returns, right? And so in a way, even people that purchased very pricey machines, they'll probably, if they didn't if they didn't done it as you've mentioned, taken their last dollars into mining machines, and still can pay for their bills and everything else, they'll get their money back, but it will take them a while, and I'm not sure that looking at a frame of a lifespan of a machine of 2 or 3 years, low season is followed by high season, right? And I think that those fluctuation will probably work for their benefit eventually at some point, if they didn't took risk which is above their abilities. And you're right, spending your last dollars on a machine it's probably not a good strategy. That should be, in a way, edged with someone which takes your Bitcoin while you are producing that, and having the mining gear, you need your dollars, not just your Bitcoin. So that should be mixed in a way, and have some kind of a method to split the risk of Bitcoin and dollars upfront.
To me, like just looking at the industry as an outsider, it looks like this is where the bulk of pressure is coming from miners at the moment. Most of them are probably still profitable. Most of the bigger miners are probably still profitable at these levels. But if you committed to hundreds of millions of dollars of ASIC purchases at $100, and those are now worth $20, and it's really difficult to get funding, because people probably don't know this as well, that Bitcoin miners can't get loans, that's very difficult to get funding. And in a bear market, obviously it's difficult for everybody to get funding everywhere. So is that correct? Is that where the bulk of the pressure is? It's not from, operationally Bitcoin price is low. It's from these kind of ripple effects from the last bull market.
The question is, how did you raise the capital to buy these pricey machines, right? If you build on your returns, once you got those pricey machines and the returns are lower, you're in a problem, right? That I think is, each operation, each person, each company takes risks differently. If you are very bullish, you'll be in a big problem these days. It will be hard to get your money back. If you have an operation which is profitable, that might lead you, to consolidations of some sort. Because on one hand you have a profitable operation, on the other hand you have funding debts that you need to return, right? So that can lead you to consolidate with someone which has the deep pockets and will be interested in taking, let's say, a profitable operation.
Yeah, I think that, so it seems like the mining industry is always talking about consolidation, but I wonder if this time maybe it will be different and we'll actually see some significant consolidation, because there's probably people in trouble. And I think there's a lot of investors, traditional investors, that have gotten up to speed in Bitcoin over the last bull market, and they've got big balance sheets and they're looking to deploy capital, and they're probably driving some pretty hard bargains at the moment, I think.
thing is, I think that everything revolves around the operation that you are running, right? Let's let's leave aside debt that you have, right? You might have a debt of this or that. The basics should be whether your operation is profitable or not, whether your cost structure is okay, whether the gear that you are running is efficient. And if that is positive, I think that's a good starting point. And consolidation is something strategic, right? Where you are just, you can assess how long will it take till thing get better, and you'll get revenues enough to cover debt that you have, or it will be too long. And if it gets longer and prolonged, I think that consolidation, we will see, companies which consolidate with other investors and money that is there. Um, we are a bit under the water right now, so the breath is how much how much air do you have in your lungs right now for several companies, and each one is pulling out of the water at a different time.
Air conditioners. Yeah, exactly. Yeah. So do you think, I think the consensus, so the consensus view maybe 6 months or a year ago was that hash rate was going to continue to rip higher. But we've basically been around 200 exahash, like kind of floating at that level for a long time. So maybe what happens for the next bit is that we're constrained by power, just as we were constrained by semiconductors. Right? Do you think that can happen? And maybe hash rate growth will be less than people were anticipating.
Bitcoin is finding, it's you see the evolution of Bitcoin sites going from China to Europe, from north to south. But I think that Bitcoin sites are looking for stability, right? You need a positive environment, both politically and regulatory. And that said, U.S. is a great place to be in. But that said, power is limited, and you have a limitation from the internal politics that will always be there in the background. And the thing is to find, a new and promising place for power. It's a bit difficult. So I think that power will be still something which is challenging. And then I know that people are always are in search of new sites, taking over, sites with infrastructure which is easy to hook into, and that will remain. As for the hash power, it is, it's steadily, but it is growing, right? If you look, it has some, very short, brief periods of being lower, but being going down, but the trend is up and monotonically going up. We are trying to factor a lot of things when you are looking just at the hash rate. You're trying to factor in the prices, and you try to factor in the semiconductor and power, and it's a multi parameter equation, which is hard to predict. But I'm looking at at trying to look it from end to end, and it seems like when everything jumps up and down and around, you can see that the hash rate is monotonically going up. So I assume that everything way in, it's still industry which is expanding, and the new power will always be required.
Yeah, no, I think that's interesting. Like it's the two key inputs, price and hash rate, are just notoriously volatile, right? So it's really difficult. It's really hard to model. And I think, when we were distributing the BMN and we were having people looking at it and trying to model it, they're struggling to see how mining could be profitable. And it was profitable, but it's hard. It's just so hard to model. So it's hard to look out and say, what's hash rate going to be, what's price going to be. These are very difficult things to model and make estimates on.
By the way, when I'm trying to assess what is happening really on in the world, I'm trying to look at mining profitability, right? How many dollars you get per day per terahash, and that's in a way, when we are looking not on a too long period, that gives you in a way some equation which already weigh in the prices and the hash rate, the global hash rate. So this is some kind of of an indicator which should be when you have a profitability per day per dollar, and your built-in electricity cost, whether you are underwater or above water. So that is kind of simplifies this analysis, which is chaotic. I agree.
Yeah, and I guess we've got more data around that with more listed companies out now. But I guess the period of that data, we don't have that much. The listed companies have mostly just been around for a couple of years, so we don't have that much data to really go on.
Yeah. I'm talking about global data, available data of that weighs in the hash rate, just the hash rate, and the coin price, and of course the inflation rate. So globally, you can see from end to end how profitable is to mine a day, regardless. And then your operation, of course, is on top of that. You need your operation expenses and everything else, and your electricity price. But that gives you your potential. This is a graph of a potential, and that gives you some kind of simplified way to understand where you're at.
One of the things I've always wondered about on the manufacturing side is how come we've never seen any of these big IT assembly or manufacturing companies, like the companies like Foxconn that makes, iPhones, or Quanta, these ODMs, the Sustec, these kind of companies that are, in China and Taiwan, that have naturally very close relationships with the foundries, with the semiconductor manufacturers. And they have, just really low operating margins, right? Like 2 and 3%. And some of them, like Foxconn, I mean, they've got a VC arm that's been sniffing around the Bitcoin space for quite a while. So I think they must have some familiarity with it. And I've always wondered, how come these guys don't come into it and invest at scale, like they do in so many other kind of technology products?
Let's say you have a few ASIC manufacturers in this arena, right? And I'm not sure that those company mentioned are in the space of making ASICs. I guess not.
No, none of them are. No.
If they want to step in, they need a supplier for a miner, for ASIC miners, and that is not anywhere to be found, right? Only recently you have Intel, which is which is the first of ASIC manufacturer which actually sells the ASICs by itself, thus allowing companies to take and assemble. But other than Intel, you don't have any supply chain of ASIC miners, and I think that from the perspective of the Chinese company which are making the ASICs, they don't want the double margin, right? They say, I will do it myself, right? They are big enough. They have a big enough operation. They made a lot of money. So it won't, it's a double margin issue. If I was, if I'm Intel and I'm selling my ASICs, I'm taking the margin over my ASICs, and then I pass it on to Foxconn or whomever, and he will add his margin, and eventually you'll have probably too expensive product in a far way for the good taste of those company, volatile market. So it's kind of hard to step in. You don't have neither the suppliers and people. This mining, ASIC mining you are very tight when the market turns bearish. You are very tight on your dollar per terahash. So it has very it is not something I would step in as one of those big companies, because uh, it's a tough business to start with, and the double margin might kill you. Intel is again, Intel is it's very nice that Intel is selling ASIC, and that trend is positive. But if you are looking for for the lowermost dollar per terahash, you will not get it from production line, which involves several several suppliers and manufacturers. This is vertical integration, let's say, right at its best.
So looking forward in maybe like 5 or 10 years, what do you think the mining industry looks like? Do you think it's the same hardware makers are still dominant? Do you think mining is still largely focused in the same regions? How do you think it'll change over the next 5 or 10 years?
As for the big companies, which now like Bitmain and MicroBT, I believe that they will remain in the arena, and they will still be leading companies. Um, if you are looking at a newcomer, the barrier of entry is high. You need to work on the most advanced nodes. You need to know exactly what you are doing, because it's not just ASIC, right? It's an entire operation, and the hardware around it is complicated, and you have a lot to learn before you can excel on that. And those companies are already big and have long time knowledge that they will leverage going forward as well. So I think they will remain the bigger companies also looking forward, unless they do some kind of of a mistake. I don't know, either bad gamble on technology, or get the Chinese government upset, because that is also one of the risks. But I think that we will see the same players going forward. In like when we've started at 2013, you had a lot of companies join the market because the barriers were low. You didn't need a lot of money, and the market was very, it was whenever you were issuing a new design, it was very easy to take the market or be at the top of the market. But it's a different ball game now. It's much more professional and much harder and more challenging. So I expect that same players will stay in the lead. Um as for power, I think that the U.S. will be more dominant in the mining business, since China is out, and the power will only become more pricey at Europe. So I don't see a lot of places in the world that you would like to mine, which are not politically vulnerable. The US is kind of, it is stable, contract is solid, and you don't need to pay off officials uh, like in other places. So I guess that the US will come more prominent in that, and will roughly will have the same players. It's a market that is not very lucrative to newcomers. It's something which is already matured in a way.
On the ASIC manufacturing side, like I think the MicroBT team came out of Bitmain. Maybe you could see something like that, fragmentation, where somebody's able to pull a team away and fend it or something like that. Maybe that's a possibility.
Right. But you have to remember that when I'm approaching, of course, when someone from with a with a scale of business which is lower than MicroBT or Bitmain is approaching, a manufacturer will get prices which are higher, right? It depends on your volume. There is it's a guerrilla game, right? And those guys with the scale that they've achieved so far have a very optimized cost structure. So whomever will come and join the game will be probably more expensive, and it will take a while till he gain the scale in order to optimize his cost structure. So it's a marathon. To people who join fresh, it's a marathon. It will not take a year or two. It will take several cycles of design of a successful one, and you of course you can make your mistakes along the way, of course. So you need a lot of money and time in order to compete successfully. It's not impossible, of course. It's possible like anything else, but it's a different, it's a different. It's a game of it's a marathon and not a sprinting contest.
So, looking forward in Bitcoin, what gets you most excited over the next 12 months? What do you think is most interesting over the next year or so?
Yeah, so we are working on an ASIC miner of our own. That is that is by far what excites me. To put your knowledge and put your whatever you know into a design. It's like it's like and this is far the greatest challenge that I have for the near for the coming year. We need to get that right. It is something that will, if the first design will be good, we will be able to continue the momentum and grow from that. We need a good start in order to win the race. So I look at the coming year as our start and hope that we can deliver as we plan.
That's great. Well, maybe when your miner comes to market, we can have you on the podcast again and we can celebrate.
Yeah, I hope so.
All right, it sounds good. Thanks for doing this.
Thank you very much. Thank you for having me.